10 seconds. Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Steven Ehrlich, Director of Research of Digital Assets with Forbes Crypto, to discuss some of the key events that are happening in the space right now. Steven, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. It's a pleasure to be here.
All right, and the big news, of course, is SEC Chair Gensler testified in front of the Senate Banking Committee, and crypto dominated a lot of that discussion. What were some of your key takeaways?
Yeah, it's really kind of funny. When I was listening to some of the testimony this morning, a bunch of the senators had to apologize if they didn't address crypto right away and wanted to talk about other things like pay for flow, artificial intelligence, cybersecurity, a whole bunch of other issues that even still would be important for crypto. But it really was kind of funny just how much it dominated the conversation, given it's still relatively small size within the broader capital markets here in the country. But aside from that, I mean, what really kind of struck me is just how strong he's kind of kept to his importance of, I guess, being relatively strict in the enforcement of securities laws as he sees it as they pertain to crypto. He's definitely disappointed a number of people recently with some of his comments saying that exchanges like Coinbase and Kraken should register because of the dozens of tokens that they list. There's a good chance that many of them, in his opinion, are securities. He's talked about how decentralized finance protocols, exchanges like Uniswap, for instance, are decentralized in name only and actually are centralized entities. He's agreed with his predecessor, Chair Clayton's remarks that basically every ICO is a security, and that he wants to kind of rein in some of this like profligate activity that he's a little bit concerned about. On the flip side, exchanges, the ones that I talked to, I mean, they want clarity as well, but it's trying to find that balance. I mean, exchanges, they haven't registered with the SEC because, in their opinion, all the tokens that they list are not securities. They're utility tokens, they're commodities, there's some other classification. And I think everyone wants to try to find that balance. Gensler has said he wants more power from Congress. Congress wants Gensler to help sort of draw the lines of demarcation between the SEC and the CFTC, for instance. And exchanges want to know what they can list and what they can't list. And in this sort of gray area, it can become a little bit difficult because if they don't list a particular hot token like Dogecoin, for instance, and another exchange does, they could lose out on a lot of money from trading activities, and then they lose those. They are not able to acquire those customers, which could be even more profitable down the line. So hopefully there's going to be, I think things are going to come to a head soon, and I look forward to it because everybody wants to try to find a way to make this work in a safe, regulated manner.
Right, and Steven, of course, this is what we saw happen with Coinbase last week, and you know, part of understanding what a crypto is, especially when you're talking about proposing lending services, which actually does exist in the crypto space now, but you certainly do need that kind of clarity.
Yeah, and this is another issue that's really kind of come to a head as well, and it really became popular last week when Coinbase announced that they sort of received a Wells notice from the SEC, which basically said that if Coinbase launched their lending service where they would offer, I think, a 4% yield on a stablecoin deposit, that they would be served with an enforcement action by the SEC. Now, this really kind of creates an interesting question as to what constitutes a security. When people think of securities, they usually stocks usually come to mind, but bonds are another form of security. And a lot of these lending protocols from Coinbase or BlockFi, they're promoted as sort of interest accounts, and the yield is sort of seen as a type of interest akin to what you get at a retail bank. But in the eyes of the SEC, it's not. You're basically lending money to someone else, and you're going to get a return. These exchanges, these entities are not regulated like banks. Banks have to deal with audits. They have to provide insurance. There's a whole suite of things they have to comply with, and so again, there's this gray area. BlockFi CEO Zach Prince, who really whose company was served a couple of months ago with a cease and desist order from the New Jersey Attorney General's office, said in comments yesterday that he wants the SEC to actually give some sort of national guidance on this. He's talked about how these are products that customers want. Importantly, the SEC and these other AGs are not accusing them of fraud. They're just saying that this is, right now, as we read the rules, this is a security. And Gensler's even said, change the security rule. If this shouldn't be considered a security, Congress can change those laws. So we'll have to see what happens there.
And part of the narrative around crypto has been that it could potentially be an inflation hedge. We certainly heard a lot about that at the end of 2020, going into 2021. Kind of remains to be seen how that's going to play out. The August numbers just came out this morning for CPI. Did the crypto markets respond at all?
A little bit, but not too much. It's hard to tell exactly what the impact is going to be because we also had Gensler's testimony and some other issues going on. The inflation numbers just came out. Inflation did slow a little bit, although it's still very high year on year. And I think the way that a lot of analysts are reading inflation right now is that this month was kind of a bit of a lull. Delta's going back up, economic activity is dropping down a little bit, especially in the services sector. We're not sure. It remains to be seen if inflation is going to stay on its high trajectory or not. And that's from once we perhaps get next month's numbers, then we'll get a better idea perhaps when the Fed might start taking tapering more seriously. And then it's going to be up to Bitcoin and other crypto assets to see if they really are going to serve that purpose as an inflation hedge, and basically how they're going to be able to perform once the training wheels come off.
Right, and Stephen, to wrap up here, how about the roller coaster in Litecoin this week? I mean, it didn't have anything specific to do with the asset itself, but just how quick news moves this tape and how you have to really interpret what comes out on these different altcoins here.
So Litecoin really was kind of a cautionary tale for investors. For people who don't know what it is, it's sort of an early derivative or fork of Bitcoin that shares a number of its common principles with a few key differences that I don't need to get into here. But it surged over 30% yesterday morning because of a fake press release that went out over a real wire that looked authentic, saying that Walmart was going to start accepting this currency in exchange for goods. And on top of that, not only did the press release look authentic, but a number of news outlets also carried the story. It was tweeted by the Litecoin Foundation and a number of other Twitter influencers. Walmart actually had to come out and refute the claim, and the price dropped back down to about where it started the day, a little bit down. But this is a really important cautionary tale for investors. If something looks unusual or too good to be true, it probably is. I mean, Litecoin is an old currency, but it's not used all that much. Walmart, yes, has been very involved in blockchain technology, especially for food traceability, things like that. They just issued a job posting for a digital currency lead, but it would be very unusual for them to start, if they were going to start accepting crypto, for them to start with something like Litecoin as opposed to a stable coin or Bitcoin. So if everyone should do their own research, and if it looks unusual or too good to be true, it probably is.
Stephen, it's such a great point. And, it's not something that's specific to the digital asset space. We've seen this happen a number of times with traditional stock equities. I mean, this happens all the time. So I just think, to your point, that investor beware. And that was my initial reaction too when Litecoin and Walmart, it just didn't make sense that would be the first place that they would, dip their toes into outside of the blockchain technology. But this happens all the time with equities.
Yeah, yeah, exactly.
Right.
So regardless of the investment vehicle, the financial vehicle, it's always important to do your own research and think to yourself whether or not something makes sense.
All right, Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.